Hello, this is Vance, and this is Wednesday, March 11th, 2015. And these are the CL trades for today using the slow hand method for price action. A couple of things today. Today was the DOE report was out, and again, we had a surplus in the U.S., 4.3 million barrels. It's, I guess, the ninth week in a row where there's been a surplus. And right at 10 o'clock here, this is where this big drop fell off as far as the market was just a real quick drop as far as pricing was concerned, which took it below $48 down to 47. Well, 47.33 was the low of the day. But I'll talk a little bit about that. I mean, overnight, based on yesterday, we had pricing was below $49. We had that. Let me just show you here. Yesterday's price or yesterday's high. Let's see. Let's pull that. Yesterday's high was just above the $50 mark. We had sell-off for most of the day, and again, we had another sell-off today. It started out of 48.90, and in fact, there was expectation that there was going to be a surplus. So really, right from the opening, we had price really kind of sold off, pulled back a little bit, and then created this channel down here. The challenge we have on the DO report day, especially when after 9 o'clock, when we get close to 10 o'clock, let's say 9:30 to 10:30, prices have a tendency to go sideways in anticipation what those reports will actually yield. And it was looking like the price there would be a surplus. The market was expecting a surplus. You could see that was the anticipation from the marketplace. And so prior to about 9 o'clock or just about 10 o'clock, you see price really went into a sideways most of the time. Then this is where at 10:30, when the price came out, flashed down here, pulled back a bit, went down again. And if you look at it from the perspective of real fast where prices went down, now when you have a move like that on news, generally speaking, it's going to pull back at some point in time, maybe retest those markets. Now, as soon as it happened, it pulled back and then sold off again. So you can see that there was a measured move here. We had price move down very rapidly at 10:30, pulled back twice, and then moved down again. Now, I mark this because typically it don't trade right around the DOE report. It happens very quickly. But after about 11 o'clock, prices really started to firm up, and that firming up took place. You could see it moved into a tight trading range. And so from there, really wasn't any place to get in on this move down. Now, you could make the argument right here, the channeled up, it looked like price doubled, almost very close to double top here at 9 o'clock, just prior to the open, or just around the opening price, or the opening bell. Right? So it's right around 9:08. So you see 9 o'clock, we had price topped out and then started selling off here. So there wasn't really a break in this trend channel. You can see it moved up. And then sold off, and you could have gotten in here if you put your stop up a little bit higher. Now, I've got something else that I've added back in. I haven't done this for a while, is the 15-tick stop box. And the reason I use this 15-tick stop box is just a visual representation of where your stop should be. So if you're going to look at taking a short, for instance, you can suggest that you can put your sell here, and you know that your stop is going to be in this area. It's just a quick representation of where those stops are going to be. So if you use it, it just gives you an idea of where the highest possible price is when you look to the left side of the chart, particularly when you're using price action. So when price got to this level, it had another sell-off. I was thinking that maybe there could be a channel in like this off these tops, but it really didn't fit, especially when you kind of doubled it up and moved down later in the day. So that didn't really quite work. So it was something that you could develop. But this particular channel, you can see there's a very rapid move out here from the open. So it went sideways as far as it looked like there was some support here. You had a double bottom here, and almost a second entry long right at this part right here, but it's off of the doji. Price fell even further. And then this is where we're getting close to 10 o'clock, and this is where we have this run the DOE report. But later on in the morning here at 11 o'clock, let's take a look at this. I just want to open this a little bit more. Across the tops here, you can see the double tops. You can see like here's a kind of a line as far as where price is now. When you have a sell-off like this and you have this recovery, and what I moved on here is that really this is like two legs up. We had a first move up, we had a pull back down to here, and move up again. So you can see that there's two moves up. Now this is still around this report. So you see here's your first move up, kind of like a pullback. You pulled back here first time, pulled second time, and you could have gotten here, and you can see kind of exhaustion. Now, it didn't look like this as a trade, but here's a measured move within a measured move. So let's say this is the larger move, and you can see that price went into more sideways. So you can see there was a pullback down to this low. We tried to go higher, and then another pullback. And once it got down to this area, it was close enough to here. If you take the 15-tick stop box, you move it down to here. There's a place to go in long right down near this bottom. Now, it's an aggressive trade. You think you're going to maybe test this double top. There's room to get out 15 ticks, but as you can see, it shot through the other side here. And so it was reasonably, that's why I marked it in green as a kind of an aggressive trade. But then prices moved down again. You can see that when it got to these double tops, especially across this area here, there was some resistance. Here's a second entry short. There's a 15-tick stop box up here. This is one at an angle, so you can see that as long as your stop is above these areas, you can take a short here. This wasn't a bad trade. You think we're going to come down, maybe it might test this area, and you can see that once it breaks to new low, and you can also see that there's the measured move here. So you can see from the measured move standpoint, we had the first move down, we had basically pulled back to this area, and you can see just the second move, and you can see it really took a while to work out, but it really did get a solid. Once it got to this bottom, you can see there's a real line right across here. Maybe it's a little bit higher, but you can see prices really couldn't get below this area. It retested, really tested the low of the day, but once price got down to this area, and this area, you could make a trade here, but you'd have to buy blind. So if you're looking at buying in this area, you'd have to lay an order down here, and keep your stop below this area as much as you can. Maybe even try to keep it below here, but it was just a little bit too far, except for this trade here. So when you see this one, here's a channel that comes down here. We have the first pullback fails, and this is a second entry long right here. Now, if you would have hung on to it, I don't know if it really would have worked. See, if you would have gone in here and hung on to it, you might have just made it. But when it went into the overlap like this, now this is something that I've talked about in the past. When prices go into overlap, you should look at bailing out. When anything more than 2 bars or 3 bars side by side, you're looking at overlap. It's best to try to break even or try to get out and then try to re-enter. And you can see that price came down here, went into this overlap, failed down to here. So this would probably be one that you would have to try to close out this trade. But when price went down, this was definitely a trap. Now, again, it's an aggressive trade. I marked it in green, but it was really close to the low of the day. You put your stop down here. If your stop is below this, you can see that when price moves, it gave you some hesitation. And as long as your stop was below there, willing to take that risk, then you'll be fine. Ultimately, you could have, bought in with your stop below at your stop at 47.32. So if you're 47.32, you move it, you buy in, like you limit in, right at 47.47, and then just and this really turned out to be the trade of the day. Moved out here, it blew right through the tops of this channel, moved higher, and toward the end of it, you can see that price broke this channel, tested a new high, a second entry short right here. Didn't really take it because you think that it was such a vibrant move, but when it comes down here, it retests, it makes some hesitation, and again, breaks the channel, pulls back, and then launches off again. Now, what I was expecting is that I think that if we had a longer time, this is 2:30, but if there's more time, we may have gone and retested this area. It certainly looked like it was going to happen, but just didn't have the momentum to carry it any higher. And so this is where we are right now. But you can see it moved into this once the 2:30 rolled around. So I just think it kind of ran out of steam. Now, so there's a couple of trades in here. It made it a little bit complicated because of the DOE report, but using the 15-tick stop box, using your 15 ticks, I think it's a reasonable way to get in. Lastly, let me take a look at the 1440 chart. If we look at that, because I've been following that the last couple of sessions, so if I take a look, if I show you that chart, oh, it didn't. Okay, this is the, and I showed this the last couple of times. Here's the bottom of this chart. You can see we're still down near that area. I was expecting maybe we'd move into this area. Let me just make it a little bit bigger. Based on the last few sessions, you can see that we're still flirting. We're still pretty trading this range here. It came down a little bit because of this report today, but it didn't stay down there. So there looks like some support. So depending on how things look maybe trading more up into this range, and we'll take a look at that tomorrow. But you can see it kind of dipped down a little bit. because of that surplus. And so we'll wait and see. I don't know if we might test down to 45. That's hard to say. We've been kind of trading between this range up here. And, on the high side, where the most touches are, let's say we're trading between 53.29, and on the low side, 48.41. But maybe the higher, this is kind of more compressed in this area. So like 51 to 48, so $2.50. We're somewhere in that neighborhood. And we're on the low side of that right now. So these are the last few sessions, from last Thursday, or last Tuesday, Wednesday, Thursday, Friday. These areas where price topped out at 51.57 has traded off about $3 to this area. Now, we'll find support tomorrow. Wait and see. We'll see how that works out. Anyway, that's it for now. A couple of things to think about. Just a real quick recap for today. One of these days I'll get into a demonstration trade. I haven't done it yet. Haven't taken a look at a couple of setups, but it was just a little bit too busy today. But I'll probably do that in the next little while. Just kind of get back in the swing of things. So now you got the stop boxes. I've added it in. Have any questions, please let me know. This is Vance. Bye for now.